Hey guys, good morning. So for a while now, I've been kind of reading Barclays. They actually released a full documentation of the impact that retail traders back from March 2020, from right when the pandemic happened, and essentially basically the options chain of retail investment in options kind of blew up, right? So as of now, the liquidity in single option plays has gone up ridiculously. And it's a 30-page paper. I'll link this for you guys if you want to read it. If you don't want to read it, I'll give you guys kind of a rough overview of what it actually is. I'm currently down to maybe like page 15. Haven't finished reading everything yet. But again, impact of retail options trading. And from what I've read recently, or from what not recently, but from overall, from what I read up until now, it's Barclays essentially giving their thesis on what they think happened for retail basically coming in and blowing up the option chain for the stock market. How they think it impacted the stock market, and what they think are the best methods to basically make money off of retail, aka dumb money, right? Because when you have retail come in, when you have a massive inflow of a bunch of retail traders come in, it's essentially, you can assume that a lot of new traders, like 99% of them, are not going to know a single thing. And if they're risking all their money in options, why not start making money off that? So, this release on their documentation is basically Barclays saying, hey, there's a bunch of retail that came in last year, March 2020, and up until this point, it's been super insanely easy to make money off of these new traders. And they basically just talk about, instead of, evidently it's kind of like, don't go and try to mine gold, sell the shovels. It's the same thing, right? And, about halfway through, they actually say that, the best method to capitalize off of this is to start selling calls, selling puts, straddles, basically anything that would kind of any like long outdated or out of the money calls. They're basically saying that before, when they had a risk factor of, let's say, 70-80%, now the risk factor is even lower, because there's so many people, so many regular traders now investing in out of the money calls or out of the money puts. You have a massive amount of volume of calls and puts that are expiring. So something like 1 in 1,000 out of the money calls, like, your chances are extremely high to be profitable when you sell calls or you sell puts, because you have a lot of big industries, a lot of big money, playing around with the strike price and basically saying, hey, there's a massive influx of a lot of out of the money, GameStop calls for, $500. That means that there's a lot of, dumb money, essentially retail, buying $500 out of the money GameStop calls. And, we can make money off of this because we can sell you guys all these calls. You guys are going to buy them only a month or 2 or 3 or 4 or 6 months out, when, the risk factor for us is like 1%, while you guys lose 100% of your money, right? So that's essentially what this thesis kind of goes into. It's how to make money off of new retail investors, and it's funny because, you guys, there's a lot of posts on like TikTok and YouTube and stuff of people like, oh yeah, I made X amount of money in options, blah, blah, blah. But, the other side of this is that while you have one person making like 50 grand from like an option or whatever, you have like 100,000 other people losing the full amount of money that they put into an option. So, for example, if someone sells calls and they get hit, or someone buys options, like a call, and those get hit, maybe one person makes a decent amount of money, but there's like hundreds of thousands of people, retail traders specifically, that aren't making anything. So, it's definitely like a 1 in a million situation. and it's documented here in the Barclays thesis. And again, you know, I'll put this up so you guys can read it. I'm only up to page 15, but basically what their documentation says is influx of new traders coming in after the pandemic. Most of the volume is coming in to options, and how to make money off of this new retail money that's coming in. And it's basically saying, you know, retail traders coming in, buying a bunch of out of the money options for no reason. There's like a 99% chance you can make money selling calls, selling puts, depending on where certain volatility marks are. So it's a really good read. Personally, like I said, I'm in data, right? My career is in data. I'm a data engineer, or like I'm a programmer. So all this stuff is like insanely, you know, this is all amazing to me, right? Eventually I would like to be doing something like this for work. But this is all stuff that I'm very interested in. So it's a very easy read for me. It's a little bit on the harder side to read if you're not familiar with a lot of, you know, data lingo. But again, super good read. Definitely sit down maybe for like half an hour, read it, try to understand it. But it's basically Barclays' thesis on how to make money off of all the retail investment that came in after the pandemic last year. So I'll see you guys later. Bye bye.